Bitcoin price freefall. Bitcoin has been in a bit of a freefall for the last couple of days, with lots of crypto analysts predicting that it could get even worse in the coming weeks. So it's a scary time for folks who purchased Bitcoin at its apex of $64,000 and are now watching it plummet. Many want to know, what is the driving force behind the sell-off of Bitcoin? Will the sell-off get worse, or will it level off and start moving back towards its all-time highs? What can a seasoned investor of any asset allocation, not just Bitcoin, what can they do to keep calm and keep investing during the tumultuous times? Times such as these. By the time you're done watching this video, you'll know the answer to all of those questions. So, lovingly, tenderly, gently smash that like button for the YouTube algorithm, and let's get started. I'm Derek West, host of Finance Squared, and on this channel, we love to talk about all things personal finance, and the price of your Bitcoin holdings certainly falls within that purview. We discuss topics just like these multiple times per week with every video we release, and you're not going to want to miss any of them when they drop. So be sure to subscribe to the channel with post notifications turned on, so you stay in the know of all the reasons and techniques of a seasoned cryptocurrency OG who bought into Bitcoin before it was cool. Since last year at around this time, the price of Bitcoin has more than doubled. In fact, it's more than 3x, 4x, or even 5x. Bitcoin went from $10,000 in May of 2020 to over $60,000 per token in early May of this year. There are and were many reasons for this unprecedented run-up in price. Namely, the fact that people were discovering cryptocurrency and learning how to trade it easily using exchanges like Coinbase and Binance. Using this knowledge, tons of people alleviated their FOMO, or fear of missing out, by buying into cryptocurrency, namely Bitcoin and Dogecoin and other coins, allowing them to participate in the crypto craze. Another reason is that inflation fears after the response to the pandemic, with leaders of both major US parties printing money like crazy after lockdowns became commonplace and affected the economy in a negative way. Let's not even get into celebrity influencer endorsements from folks like Elon Musk, whose company, Tesla, purchased a boatload of cryptocurrency last year, or was it earlier this year? The timing of that event escapes my mind. But in any event, it helped to spike the price to out-of-this-world levels. And I'm sure there are many other factors, maybe some of them more important than the ones I just listed. But like all run-ups to bubbles, the euphoria ends at some point. People get sober and really start taking a look at what it is they are actually investing in. Does it meet the value proposition for the money that they're investing in it? And you can tell that Bitcoin and other cryptos are in a little bit of a bubble. How can you tell? Well, you have to learn about the 5 stages, and the 5 stages mirror the stages that we have just been experiencing in this cryptocurrency craze. Those 5 stages would include boom, euphoria, profit taking, and panic. Like I mentioned, Bitcoin and other cryptocurrencies, frankly, exhibit all 5 of these stages. Let me explain them so you know what I mean. The displacement stage. The displacement stage is when investors fall in love with a new type of technology, a new way of doing business, a new strategy, things like that. Like when interest rates are at all-time lows, or the internet is creating new ways of doing business, or digital currencies like cryptocurrencies are disrupting regular currencies and changing the way money is changing hands. You see, when technology is brand new, people can't really understand or perceive exactly how it will change the way things are done. And when they begin to invest in those things, they just sort of throw money at the problem, not really understanding the value proposition of the new technologies that are enabling this new way of doing business. That's true in the dot-com bubble, and that's true with cryptocurrency. For example, in the dot-com crash in the 90s, no one could foresee that one of the companies that was started during that time, Amazon, would rise to take over the business of most all the other dot-com sites. Same with Bitcoin and other cryptocurrencies. The technology is so new, and some of the ideas and implementations are so radical that we have no idea how it's really going to impact the world just yet. But folks are investing in it like they do. We do know that it's revolutionary and earth-shattering. The way it's being utilized today might not be the way it's being utilized in the future. Nevertheless, however, investors are still investing in it, hoping for the best. This is leading to a boom phase. It's happening in crypto, and it's happening in other technology and gold rush cycles. This is where the assets gain momentum as more and more people jump into the fray. Some actually learning about the technology and investing in it prudently. Others with money to spare are just looking for new ways to earn easy returns, and they jump in to see which way the investments are going to go. Others still dive in with a ton of FOMO, fearing that they will miss out on all the profits during the run-up. You see, greed is a hell of a drug. But during this phase, the asset gains widespread media attention. Also at this stage, celebrity economic influencers may start to pump it up and give it more attention, causing more and more FOMO as people begin to jump more and more into the asset, hoping not to miss out on the next big thing. And as more and more people are jumping into this fray, this causes the asset class to grow beyond its current justifiable valuation. This causes the euphoria phase of a bubble. In this phase, early adopters see their assets grow even more than they ever could have imagined. Late adopters as well are seeing massive profits, and thus they feel justified in their investment. This even occurs to some FOMO types who have experienced significant gains if they got in early enough. This reinforces a perhaps misplaced trust in the asset's ability to maintain its current value. But this self-reinforcing phenomenon justifies even more investments in the assets, leading to its value increasing at an even more rapid pace. It's at this point that people who did the prudent research in the beginning are starting to notice that the valuation of the asset doesn't match its value proposition, and they suspect that they are holding onto an asset that is soon going to pop, whether in a big way or in a small way, meaning that they're looking to take some profits out of their investment. Others are deciding the timing of taking all of their money out of the asset, thinking that the asset will burst and they're going to lose a lot of their money. And as latecomers are still entering into the fray, hoping to buy the dip, the price may actually hold on for quite a little bit, even as other investors are pulling out. But eventually, the initial adopters and some of the early adopters notice that the price run up is not continuing at its normal pace, and they realize as well that it might be time to take some profits or get out before the investment turns negative. Now note, this may not lead into a panic unless a lot of early and late adopters do the same thing at the same time. The profit-taking phase can drag out for a long time. Weeks, months, maybe even years in some cases. Sometimes an outside event is the only thing that leads to the bursting of the bubble. The truth is, no one knows when or how a bubble is going to burst. It just does. And when it does, the selling leads to a self-reinforcing panic paradigm. And that's the next phase, as a matter of fact. You see, the panic is when people who are holding the asset and who held on too long notice that the price keeps continuing to drop and drop and drop. And therefore, they look to get out as quickly as possible, thus causing the price to drop even more, even faster. Now, the order in which people get out of investments is usually the FOMO folks first. These are guys who fear they were missing out on a good thing as the price value ran up. And now they realize that they may have actually, missed out on a good thing. And they are trying to keep from losing as much money as possible. The next set of folks to jump out are the early adopters. They hope to either profit before the asset falls to the levels that they purchased at, or break even once it falls to that level. And finally, the initial investors, the ones that didn't kick off the panic selling anyway and are still investing. They're typically the last to sell, if they sell at all. They rode the asset all the way up, and frankly, they believe in it, and they weren't looking for a quick buck to begin with. But once the panic is set in motion, more than likely, the asset or asset class is not gonna inflate again to pre-panic levels, since people likely at this point are spooked by the asset class, or at the very least, they have a better understanding of the asset and what its value proposition is. At the time of production of this video, I still believe we were on a profit-taking phase, as long as the price of Bitcoin remains above $28,000, that is. If it falls under that, then I would say, we're in a full-blown panic mode. And more than likely, the asset will shrink back down to under $10,000 per token, which in all honesty is about where I think it should be, according to its value proposition. And just what is Bitcoin's value proposition? Bitcoin, one of the original cryptocurrencies and the first use case for blockchain technology, is a value store and a value transfer mechanism. In other words, it's money. And money can be described as, in the words of a random European Union central banker, as a language expressing value. And I see in many places that the value proposition for Bitcoin is supposed to be a digital gold. And I can agree with that. It's probably more valuable than gold and platinum, in that its storage and maintenance costs are very minimal at best. And because it makes transferring money to anyone, anywhere in the world easy with very little associated fees and middlemen slowing things down. And because of this, it can make the claim that it represents a new way to do business around the world. Because it doesn't need third-party central banks or corporations or governments to help in this process, it automatically simplifies much of personal finance to a very large degree. But it's not perfect. Bitcoin has several problems. For example, its speed. Bitcoin, as one of the first cryptocurrencies, is also one of the most antiquated and one of the worst performing of all the cryptocurrencies. I've done a video on cryptocurrencies and their speed. Take a look in the video card above. But it's one of the worst performing in terms of latency and throughput, taking 60 minutes to complete and verify transactions and only capable of handling 33 transactions per second. It also has environmental issues because the algorithm that Bitcoin, and let's be real here, many first and second generation cryptocurrencies use to mine their currencies and to validate transactions. Well, that algorithm can be defined as inefficient. Some folks have described this algorithm as anti-efficient. In other words, it was designed to be inefficient, which is kind of true. It's a cryptocurrency, which allows for anonymous, independent transactions. Keeping those transactions secure and doing so without needing third-party intervention is a very complicated task, and thus the mathematical puzzles that need to be solved to do this, well, they're very inefficient. So it's a feature, not a bug. And frankly, there are some regulatory issues around Bitcoin that might need to be cleaned up a little bit as well. Because of the anonymous nature of Bitcoin ownership and use, anyone can transfer Bitcoins to pay for just about anything. You see, all you really need to do is you need a crypto wallet and a key, and boom, you can utilize Bitcoin, which is great if you have a completely legitimate business to conduct and you just want to do it with as few barriers as possible. But what if you want to conduct illegitimate and or illegal or maybe even terroristic business? Well, you can do that as well. To be fair, however, plenty of people conduct illegitimate, illegal, and terroristic business with fiat currencies as well. Let's not even get into the legal issues of reporting income for tax purposes. That's a whole other video. Like and subscribe. And then there are just other cryptocurrencies. The fact of the matter is that there are other coins out there that do what Bitcoin does and do it much better. And as a matter of fact, are much cheaper to own, including other first generation cryptocurrencies like Dogecoin or Dogecoin or however you pronounce it. But even second generation coins like Ethereum and Chainlink, they also might take away a lot of Bitcoin market share. The same with third generation coins like Polkadot or Cardano. But the real issue with Bitcoin is that people, at least up until now, don't really understand the true value that Bitcoin brings. It is nice that people can hold on to Bitcoin as something of value that may or may not continue to increase in value as they hold it. It's nice that Bitcoin can be used as a hedge against inflation of fiat currencies that are oversaturating economies due to rescue packages passed by governments as a response to pandemic lockdowns. All that said though, Bitcoin is not a company that provides goods and services to people, which then pay that company in revenue for those goods and services. Bitcoin is not a commodity either. That can be used and purchased by companies and refined and turned into real products that can then be sold to either companies or individuals for a return on that investment. Like gold or silver or copper or wheat or wood or any of those commodities. Bitcoin is fundamentally ones and zeros on somebody's hard drive. Those ones and zeros, they're not just any ones and zeros. They represent a new way to think of money. As the first foray into a new technology and an economic paradigm, it is most useful to people when it enables value transfer and not just looking nice in your crypto wallet. So what should you do to make sure that you are not panicking when or if Bitcoin keeps sliding? Well, first things first. If you believe in the technology, hold on to your tokens no matter what price level you bought it at. Remember, it's a new way of doing business, a new way of thinking of money. If it happens to be highly valued, then that is just a cherry on top. If you don't believe in the technology and we're simply looking for a quick buck, hold on to it anyway and maybe buy more. Like I said, this is the profit-taking phase of this asset bubble, and it may still hit another record high before people really start getting out of it for other assets and cryptocurrencies. If you believe in other cryptocurrencies more, now is a good time to move any holdings you had in Bitcoin into other currencies that are out there. Polkadot and Cardano are popular spots. Ethereum has been taking a lot of heat lately, and deservedly so, but it's also a popular destination. I'm going to have a video out on the best and brightest cryptocurrencies in the near future, so make sure you're subscribed to this channel with post notifications turned on so you don't miss it when that video drops. Also be sure to drop a comment down below with your thoughts on the Bitcoin price slide. Are we in the midst of a full-on panic, or are we still in profit-taking mode? Inquiring minds need to know. And remember, a goal without a plan is a wish. A goal with a plan and no action is just a wish list. Take action on the technology you believe in, like Bitcoin, by sticking with it no matter what the price level is. And I'll catch you next time. Peace.